A very good morning. Happy Monday. Feels good to be back after a week's break. Nothing much has changed though, I feel. US stimulus talks and Brexit talks are still in the limbo. Cases continue to rise. But yes, the vaccine rollout news has been the lining that we've all been grabbing onto. We'll talk about three things. Down on Friday but strong for the week. Challenging week for the dollar. And whose fish is it anyway? US stocks edged lower Friday but notched weekly gains as investors tracked developments on the coronavirus aid package. The S&P 500 was down 0.4%, the Dow was down 0.4% as well, and the Nasdaq was down 0.1%. Friday's stock moves mark a pause after major US indexes clinched fresh highs last week on optimism about a stimulus package. Top Republican and Democrats have been closing in on a relief package that would send direct payments to many Americans, enhance unemployment benefits, and provide aid to small businesses and fund distribution of the COVID-19 vaccine, among other measures. For the week, S&P 500 and Dow were up 1.3 and 0.4% respectively. The Nasdaq added a stronger 3.1%. Treasuries ended last week down a bit, sending the 10-year yields up 1 basis point to about 0.94. It was a particularly busy day in the stock market. Friday was quadruple witching when options and futures on both the indexes and the stocks expire simultaneously. Additionally, a slew of indexes rebalanced, driving heavy activity across the market. One index swap that traders have been buzzing about for weeks is that of Tesla, which is expected to join the S&P 500 on Monday, which is today, spurring heavy activity around the market close on Friday. Dozens of index funds that track the S&P 500 needed to purchase tens of billions of dollars of stock at Friday's closing price to follow the index as closely as possible. The end of the trading day was especially busy. About 1.7 billion shares worth more than 150 billion traded in Nasdaq's closing auction, the highest dollar amount ever. Tesla shares jumped 6%, logging much of their advance in the last minutes of the trading session. Apartment Investment and Management Co., which is leaving the S&P 500, fell 13 cents or 2.8%. In other news, FedEx fell about 5.7% after the delivery company beat analyst profit expectations but said higher revenue was partially offset by increased costs, including from safety equipment to protect workers from COVID-19. On to FX, it's been a challenging week for the US dollar. The greenback fell to fresh 2.5-year lows across most of the major currencies, but as the week drew to a close, it finally rebounded. While some may hope that this marks a bottom for the US dollar, there is scope for further losses in the coming week is what some analysts are writing. Vaccine progress and the prospect of a stimulus deal are some of the main reasons for the dollar weakness, and that is not expected to change. No US economic reports were released on Friday, but outside of housing, US data has mostly surprised to the downside. This week, revisions to the third quarter GDP, personal income and personal spending, existing and new home sales are due for release. Housing data should hold steady, but income and spending should be softer. With that said, the primary driver for dollar flows will be year-end position adjustments, stimulus and vaccine news. Short covering after a strong move this year is one of the few reasons why the dollar could extend its recovery in the coming days, is what an analyst is writing. Euro snapped a 4-day rise despite another piece of better than expected data. The German IFO Business Climate Index rose to 92.1 from 90.9 with improvements in both the current conditions and expectation components. Throughout this month, we have seen consistent upside surprises in the Eurozone data that justifies the currency's rally. With no major Eurozone economic report scheduled for release next week, markets' appetite for US dollars will be the primary driver for Euro USD flows. Lastly, the pullback in sterling on Friday was most significant as the Brexit headlines grew more negative. Talks continue, but with less than 2 weeks before Britain is scheduled to leave the European Union, they are no closer to the deal. On Friday, the European Commission admitted that it is unknown if and when there will be a deal, and that seems to be the view shared by the UK officials as well. Fishing rights is still the main obstacle. It's a fraction of UK's GDP, just 0.15%, but a highly emotional issue because Britons believe that British fishing grounds are first and foremost for British ships, but the EU also wants access for its boats. Quotas are set on the volume of fish that can be caught each year, and the UK wants to control who can fish in its waters. The EU, on the other hand, is under significant pressure to maintain current quotas because of the plentifulness of the UK seas. It is such a big point of contention that the Brexit deal could live or die on fish. Stronger UK retail sales may be one of the only reasons why Stronger UK retail sales may be the only reason why sterling did not see a much bigger decline on Friday. The drama continues, and we'll see how this thing plays out over this week. That's the update. Stay safe and healthy, everyone. I'll speak to you tomorrow.